Welcome to the Red Cloud Research Roundup, hosted by Red Cloud Financial Services. It is December 9th. Canadian explorer and developer ATHA Energy has had an exciting year, including recent success in their surface sampling and a positive exploration target report. Managing Director and Head of Equity Research David Talbot is here to delve into the details leading to the Red Cloud Research team's recent initiation on the story. Rounding out the episode, VP Mining Analyst Taylor Combaluzier has some news on Grid Metals' recent drill results and Lifezone Metals' updated mineral resource estimate. So with that, David, why don't you kick things off?
And thank you for that introduction, and welcome to episode 84 of Red Cloud Securities Research Roundup podcast. I'm David Talbot, Managing Director and Head of Research here at Red Cloud, and Taylor and I are pleased to join you today as part of an ongoing series of discussions with the Red Cloud Research team. Taylor will be talking about Lifezone Metals and Grid Metals in a few minutes, but first I'd like to speak about a couple of uranium names that had some big news this week, ATHA Energy and Energy Fuels. Let's start with ATHA Energy, that's SASK on the TSX Venture. We recommend ATHA with a buy and a recently increased target price of $1.40. Now, we visited site here in Nunavut on 3 occasions, and ATHA is an investment banking client of Red Cloud. A week after ATHA Energy announced a very impressive and realistic exploration target for its 43 million pound Angelac project, it also announced results from its surface mapping program from this year. Angelac in Nunavut makes up about 52% of our ATHA Energy NAV right now. But these recent results sound very positive as prospecting has identified several outcrops with high-grade mineralization. Assays are due in the first quarter of 2025. These results are from areas that lie outside of the LAC 50 deposit exploration target model, so this is all about blue sky. Recently, ATHA had a third party determine an exploration target range of between 60.8 million and 98.2 million pounds with an average grade of between 0.37% and 0.48% U3O8. And last week's prospecting news builds on top of that. So we view this LAC 50 exploration target of up to nearly 100 million pounds as conservative and high confidence. Mineral composites of 4 meters square were used, grades were capped at 5%, and the modeling underwent ordinary kriging. But more importantly, this target is based only on existing drilling and known zones. The model is restricted to drill results only and focused on the existing LAC 48, 50, 52, and 54 mineralized trends near existing historical resources. Only about 24% of those trends cumulative have been tested to date, but some of those trends extend for 10 to 15 kilometers. And it's believed that this target can be realized in the short term. The lower end of the exploration target was in line with Red Cloud's mineral inventory estimate of 58.3 million pounds for LAC 50. We've since increased our mineral inventory estimate to almost 80 million pounds, or about midpoint on the new target range to help us achieve our new target. That said, I believe we're being even more conservative than ATHA. This story is all about resource growth at Angelac right now, and I believe it will be even more rapid and impressive than before. Thus far, it's expected that all known mineralized trends are real and just need work as they're open along strike and at depth. With this new deposit model, ATHA Energy's exploration can now become somewhat more predictive in its approach. It de-risks future expansion drilling and suggests high potential for additional discoveries or trends parallel to these current known zones, if not across the entire property. Structure is the key, and management believes that mineralization here looks a lot like Eagle Point Mine, an operation ATHA knows very well. The recent prospecting results did include mentions of a new high-grade discovery. It's located between the Mushroom Lake Zone on LAC 52 trend and the Hot Zone on LAC 54 trend. Extensive bedrock outcrop was sampled and returned off-scale radioactivity of over 60,000 counts over a 3-kilometer strike. Vein-style pitchblende up to 30 centimeters thick was also identified within basalt at surface. Now, ATHA suggests that over 10,000 counts per second indicates high-grade uranium at Angelac. Of course, these assays are pending. And this trend is entirely new. It has not been drill tested nor included in the exploration model, so that's good news. Based on some of these results, management staked another 70,000 hectares of ground and now controls the entire basin. Management has taken great strides this year in advancing the understanding of Angelac project and the LAC 50 deposits, suggesting it looks a lot more like the Athabasca Basin basement-hosted deposits than originally expected. Plus, this basalt-hosted vein-style mineralization found in outcrop and other zones with base metals just suggests this is likely a big system with a lot more going on. In the exploration model, we believe it's being very conservative. It takes into account only those known zones, like I've said before, no blue sky, and still suggests an over doubling of resource potential to nearly 100 million pounds. Now, we doubt this project will stop there, given its prospectivity from one end of the project to the other, and the recent prospecting results that really emphasize that point. We have 4 uranium exploration companies that have owned this deposit for the past 15 years. And we still love this project. We see the potential for resource growth again gaining momentum, much like a decade ago when it quickly grew resources from 0 to 43 million pounds. And at 0.7% U3O8, this is the second highest grade project in Canada outside of the Athabasca Basin. So keep watching ATHA. Again, we have a buy and a $1.40 target price. We anticipate exploration to become increasingly aggressive in 2025, with winter drilling expected to begin in March. The goal for next year is to advance the LAC 50 resource estimate and build out a prospective pipeline of additional targets. Next, I'd like to discuss Energy Fuels. We recommend the stock with a buy and a $16 target price. That's EFR on the TSX. While I may have visited about a dozen different Energy Fuels operations in the past 17-18 years, what I'm going to speak about today is new to me and most Energy Fuels investors that might be focused on uranium. We believe that Energy Fuels' recent acquisition of Base Resources was accretive because it essentially acquired a $1 billion US project for about $250,000. We are speaking about its 100% owned Toliara heavy mineral sands project and its prospect to produce titanium, zirconium, rare earth elements, and minor uranium. We estimate the NAV of this project to be about $1.3 billion Canadian, and the project now makes up 38% of our EFR NAV. Now, don't get us wrong, Energy Fuels is still a uranium company, and the mill will be focused on uranium production in 2025. But its control of White Mesa Uranium Mill in Utah makes it possible for Energy Fuels to process monazite and rare earths, an opportunity that other companies just don't have to realize without massive infrastructure improvements. Even more recently, Energy Fuels announced that the government of Madagascar has lifted the suspension on the development activities at the Toliara Heavy Mineral Sands project. And now, Energy Fuels has entered an MOU with the government, which did outline some key financial terms. Terms are highlighted by the inclusion of a 5% production royalty and 80 million US worth of social payments by Energy Fuels. Notably, the government is committed to providing active and public support. It will help acquire authorizations and permits in a timely fashion, and this will start with adding the rare earth element bearing monazite recovery to the existing mining permit, and the government has agreed not to seek an economic interest in the project. The government's lifting of the suspension and commitment to adding this mineral production, rare earth production, to the mining permit is very positive. It shows that it wants to move this project forward. As of December 2023, a PFS showed that by adding monazite byproduct, employing a simple bolt-on circuit to the 2021 pre-feasibility study for ilmenite, rutile, and zircon production, nearly doubled the post-tax NPV to US $2 billion. Now that valuation doesn't include any upside either. With the project suspension lifted, Energy Fuels might actually hit the drills and work to increase current resources to help improve project economics even further. These recently announced payments and royalties make little dent in our DCF valuation. The $80 million payments are minuscule compared to the billions of dollars of cash flow this project could generate. Thus, it has little impact on our current DCF model for Toliara. Furthermore, the 5% royalty payments were already built into the PFS, and therefore they were built into our DCF model, so again, it has no material impact on our valuation. So we do see this as very positive news for Energy Fuels. It's working towards making a financial investment decision by early 2026 here. Meanwhile, negotiations to formalize the terms of the MOU are also underway. And while production is still a ways off, other mineral sands projects in Australia and Brazil are also being advanced. Sending monazite to White Mesa Mill will go a long way in helping feed that mill and its newly commissioned Phase 1 rare earth element circuit capacity of 10,000 tons per year. A pre-feasibility study is underway studying the possibility of increasing monazite capacity sixfold. Meanwhile, many investors are looking forward to getting back to business on the uranium side. Further contracts are being signed and negotiations continue focused on allowing Pinyon Plain ore haulage to the White Mesa Mill. We await 2025 production guidance any day now, but we do anticipate ramping mine production to a run rate of 1.1 to 1.4 million pounds by the end of this year. You add Nichols Ranch ISR mine in Wyoming and Whirlwind mine in Colorado, both being prepared for a potential go decision as the market dictates, and that could drive production rate to as much as 2 million pounds by 2026. So that's it for me. Taylor, what do you have for us this week?
Thanks, Dave. This week I'm going to discuss Grid Metals. We have a buy rating and 35-cent target price. Grid is a Red Cloud banking client. Grid announced drill results from the first 6 holes drilled at the Eagle Gabbro trend within its copper-nickel project in southeast Manitoba. Drilling intersected an outcropping, moderately to steeply dipping zone of copper-rich magmatic sulfide mineralization averaging 20 to 30 meters in width at 2 separate areas, at E15 and New Manitoba, which are 400 meters apart at the southern end of the trend. Highlights included 1.47% copper equivalent over 25 meters at the historical New Manitoba occurrence and 0.99% copper equivalent over 20 meters at the E15 target. Mineralization remains open at depth and along strike. We believe the ongoing IP survey could potentially help the company determine whether the mineralization is continuous between the E15 and New Manitoba areas. Now, there is one hole plan to test a small magnetic high anomaly located between the 2 target areas, and results are pending. Assays for an additional 12 holes at both the areas are also awaiting release. Drilling is also expected to commence soon at the Acme target, which is 2 kilometers northwest of the New Manitoba area. In our view, these drill results are a positive step for Grid towards defining additional mineralization and new deposits across its copper-nickel project. Grid aims to delineate over 80 million tons of open pit resources, which would help de-risk the project and show its economic value. Next, I'll be speaking about Lifezone Metals, which is not rated. Lifezone announced an upgraded mineral resource estimate at its 69.7% owned Kabanga nickel project in Tanzania. The new resource delineates total M&I plus I resources of 58.1 million tons at 2.61% nickel equivalent for a total of 3.4 billion pounds of contained nickel equivalent. Notably, 81% of Kabanga's resource tons are now in the M&I categories. That's up 10% from the 2023 resource, and they can now be used to support the conversion to proven and probable reserves. We believe the sizable resource could continue to grow as expansion potential has been identified at the Safari Link Zone, while exploration upside exists at multiple high-priority regional targets. Additionally, Lifezone reported that it is evaluating the potential for a strategic investment by a Japanese partner alongside the sale of offtake through Lifezone's marketing rights. It is also working with its project partners to conclude a joint financial model, which is a condition for BHP's second investment. BHP has an option to increase its ownership to 60.7% of Kabanga Nickel and indirect ownership of Tembo Nickel, which holds the Kabanga project to 51%. We view this resource update positively as the majority of resources are now in the higher confidence M&I categories that could be used to support the forthcoming definitive feasibility study, as only M&I resources can be converted to reserves. We believe Kabanga is well positioned to become one of the world's major nickel sulfide operations. We also look forward to results from the DFS, which should wrap economics around this large, high-grade deposit and trigger further investment from BHP.
Thanks for listening to the Red Cloud Research Roundup podcast, here to provide insightful news on the mining landscape. To access the research reports discussed, explore all of Red Cloud Securities' free research reports, and to subscribe to our email list, you can visit redcloudsecurities.com. That's all for now, and see you next Monday for a new episode of the Research Roundup.